Hey, 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 good morning, everybody. Happy Non-Farm Payrolls. Happy Friday. Good to see you. Gather around. There's a few seats at the back. There's a couple of leftover donuts and coffee. Help yourself. There's a few chairs up front. So good morning. Welcome to Non-Farm Payrolls, whatever, 13 years, something like that. Getting close. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let me double check the chat's working. It's not coming up on this platform. Let's check the other one. No, it's not coming up here. Why not? Refresh. All right, it's not popping up on my thingamabobber. Let's do this. All right, so I got the other chat up. Can you guys confirm that you hear me? Can you confirm that you have my charts? Let's do that first. Raymond Cook, 156, yeah. That's 13 years though, isn't it? Anyways. Let's see if there's a lag. Yeah, okay, you got sound, okay, there, and a little bit of a lag, not too bad. Now, why isn't it coming up here? Let me see if I can figure this one out. Why isn't it coming up here? Oops, didn't mean to do that. Why is it doing that? Okay, didn't mean to do that. Yeah, that's always going to, hang on guys, sorry. I don't know why your chat's not coming up in my platform, even though I switched. All right, not a problem. I'll close that. I'll close that. And I'll move this over. Hang on, I just got to get my setup going here. All right. Hang on, almost done. I know, it's so difficult. I gotta move this around. For some reason, the chat's not coming up in my streaming platform, but I have it manually as a backup, which is a good thing. All right, well, I guess that'll have to do. I will close this other thing. Almost done. Hang on. You're being so patient. All right, that'll have to do. Yeah, 13 years, right? Yeah, 13 years exactly. Very, 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 very cool. So thank you very much to FX Street for hosting me for this one particular event. I've been doing events at FX Street longer than 13 years, but this is the 13-year anniversary of Trade Non-Farm Payrolls Live. So very, very cool. How many people have been trading currencies more than 13 years? Anybody? It's a long stretch, but what an enjoyable thing, huh? By the way, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're a boutique foreign exchange brokerage firm, and we would like to earn your loyalty and respect, and one day, because of that, be the prime broker to your successful Forex trading business. So I've been doing these monthly webinars at FX Street for well over 13 years. I also do daily webinars for our clients. So if you'd like to join those daily webinars, which are more than an hour every single day, please visit tradersway.com, open up an account, and in your back office, there's a button that says webinars. feel free to join me Monday, Tuesday, Wednesday, Thursday, and Friday. Also today I'm going to use my charts that you're probably familiar with. And my trading platform has multiple profiles, right? I don't know, what is that, 2 dozen, 3 dozen profiles, and inside there's multiple charts, and each chart has a different type of template with different indicators like monthly pivots, weekly pivots, daily pivots, different moving averages, different oscillators, and all that kind of stuff, all tickety-boo nicely. If you'd like a copy of all my indicators and all my chart templates and all my profiles, you can download them for free at charts.fxbootcamp.com. Forex Pipper, been trading 16 years now. Congratulations. That's really good. And Jimbo, for sure. And a few people, 6 months. Right on. Well, let me tell you that you probably have it easier, that you'll get to where I am skill-wise a lot faster than it took me. So, you know, I don't know, 6 years is probably the new 13, right? I don't know. So congratulations, everybody. Brooke started yesterday, sure. Okay. Yes, tradersway.com to open up an account and join my daily webinars. And to download my chart templates, please visit charts.fxbootcamp.com. Charts.fxbootcamp.com. Of course, that's being blocked, but maybe the moderator could post it. All right. All right, so that's it. So what are we going to do today? Well, we got this thing called non-farm payrolls, and it's a market mover. It's a report card of the general health of the U.S. economy. We have a central bank that may or may not be satisfied with their neutral stance, meaning they might raise interest rates by the end of the year, and they might not. 6 months ago, we were certain they were going to raise 3 times this year. Now we're certain they might cut interest rates this year. So the market has no idea what they're doing. And that's the funny thing, though, guys. That this leaves a lot of opportunity for you as a trader. A lot of people hold professional traders on Wall Street and other big banks as, Illuminati. These guys are not that bright. Some of them are really wicked smart, but most of them are not that bright. And you get this a lot where when you look at the market, even 3 months ago, the market was certain the Fed was going to raise interest rates 3 times in 2019. Now we're pricing in rate cuts. So they went from jacking up interest rates to cutting interest rates in just a few months, which means they have no idea what's going on. Thank you, moderator, for the posting of the link. Okay. Now, this leaves an opportunity for you because you can learn how to do fundamental analysis as well as technical analysis, and it's really absurd. 3 is too much, and cutting is probably not necessary. But there are lots of professionals that just run around with their heads chopped off, making a bloody mess of everything. The sky's falling, the sky's falling, the sky's falling. I'd rather just focus on doing analysis. Okay? Oh, thank you, Marina. That was quite a few years ago. Yeah. So I would rather us focus on doing the analysis. Okay. So we had some news. What was it? 3 weeks ago, maybe 2 weeks ago? I guess closer to 3. About an inverse yield curve. Right? And what do we know about an inverse yield curve? If you pull out a textbook, it says, if there's an inverted yield curve, the stock market's going to crash. And you've probably heard me say that over the years as well. Is that always true? No, it's not always true. It's true in the context of fundamentals. So we have to ask ourselves, if we're logical and intelligent analysts of fundamentals, what does lead to a stock market crash and recession? Well, it's when inflation is so high and so rampant, the Fed does have to jack up interest rates. Okay? So what creates high inflation? Well, rents, for example, wages, for example, fuel prices, for example, all these things lead to something, right? There's so much demand for energy. There's so much demand for human capital as well as physical capital. So like demand for buildings and machines are super high. Demand for a workforce, a labor, a new employee is super high. So you got to pay them more, right? So you have to pay more for rent, more for your employees, more for insurance, more for your equipment. Everything gets more and more and more expensive. That's inflation. And when that's out of control, the Fed jacks up interest rates. And you get to the point where, well, what is it? How about this? What does it mean? Like what's going on when the Fed raises interest rates? Why does it slow the economy down? Well, imagine now you're a business. Let's forget about consumers and all that kind of stuff. Let's just say you're a business. And you have medium-term, large investments you need to make, but only short-run cash flow. For example, you buy $2 million worth of shoes because you're a shoe salesman. You own a shoe store. So you go to the bank and you're like, hey, bank, lend me $2 million for my inventory. They're like, okay. And they charge you 5%. Why? The Fed funds rate is 5%. Well, actually, it'd be a prime rate. So you might, if the Fed funds rate is 4%, your prime rate's probably, your loan will probably be 5.25%, something like that. And this, as the Fed raises the interest rates, that borrowing cost will go up. So if suddenly the Fed raises interest rates to 5%, now because you're paying a prime rate, not a Fed funds rate, you're paying a prime rate, you might be paying 6.25%, even though the Fed funds rate's 5%. So now you're borrowing at 6.25%. And this keeps going as borrowing costs go up. Now, why are borrowing costs going up? Because the Fed's raising interest rates. Why is the Fed raising interest rate? Because inflation is rampant. What signs of inflation do we have? Out of control wages, out of control housing and real estate prices, out of control prices like energy prices and all this kind of stuff, right? The Fed continues with this process until all this inflation slows down. But what if you only have a 7% profit margin as a shoe store? What happens when your prime rate gets to 7%, which means the Fed raises interest rates to 6%? And by the way, I'm making up the percentage, right? But it's probably not that far off historically. Well, you get to the point where just borrowing money, right? Just borrow money to keep your doors open, to stay open as a store, right? That cost of borrowing short-term money from a bank is higher than your profit margins. Now, you're still making cash, right? People still show up to your store. You're still selling shoes. You're still paying rent. You're still paying wages, right? Same store sales are up month over month, year over year. You're just not making any profit. Ha! Ha! All right, so you report that in your annual or in your quarterly report, and your stock suffers a little bit because you say, well, same store sales are up, but we don't have any profit. So your stock takes a bit of a hit. But you know what? It's because of the Fed funds rate being so high. So now All your competitors are basically the same, and other industries are basically the same because you're selling shoes, discount shoe store, right? But General Electric and all these other companies, Ford Motor Company, they also borrow money for things like, if you're Ford, you got to buy a $20 million machine to put on your assembly line, and then you're going to depreciate it over years. And so you need to borrow on the long run and then pay it back on the short run cash flows and all this kind of stuff, but they pay the prime rate too. So all businesses now, it's systemic, are less profitable or even unprofitable, even though their primary core business is happening. People are buying cars, people are buying shoes. You're making cars, you're making shoes. In this case, you're selling shoes. You're just not turning a profit because your borrowing costs are higher than your profits, right? Or your TR is higher than your MC if you're an economist, right? Okay. So this continues for 6 months, or let's say another 3 months, right? So 3 months has happened, you reported no profits. A second quarter is now done, and the same thing you report. You are not selling, or you're selling just as much shoes, but you're not profitable. 2 quarters in a row, you're not profitable. Nor is anyone else really that profitable. Stock market starts coming down, right? And then what happens? The economy starts slowing down. It's called the household wealth effect. People don't feel as rich as they used to because the stock market came down. So anyways, so they stopped buying things. They stopped buying shoes from you. They stopped buying cars or trucks from Ford, right? So those you start laying off employees, and then they start laying off employees, and retail sales start coming down, and all of a sudden it all comes falling down, right? And over the course of 3, 6, and 9 months, it becomes more and more evident that the economy has slowed down, right? You see? So long story short, we're in this scenario where we have an inverted yield curve. And what does that mean? Let me get my drawing tool. And let me open this up. Let's change this to blank. Okay, an inverted yield curve. So I haven't done this in a while, but let's do this. Okay. I haven't done this in a long time. How do I label it? Okay. I guess it's interest rates over time. Okay, over time. So let's go, let's do 1 year, 5 year, 10 year, 20 year, 30 year. All right, let me think about this now. Hang on. Let me think about this. I haven't done this in a long time. All right. If you were to make a 1 year investment relative to a 30-year investment, your return percentage-wise should be lower than your return if you made a 30-year investment. Now, the reason for it is if you make a 30-year investment, you're taking on a lot of risk. Anything can happen over 30 years. And to mitigate you for this risk, you need to be rewarded. The more risk you take, the more reward you should receive. So typically, you might see a yield curve that looks like this. So if you borrow money, let's say on the short run, there's not much risk associated with it. So the interest rate or return for the loan should be lower. 10 years should be higher than 1 year. 20 years should be higher than 5 years. 30 should be higher than 20, 10, 5, and 1, right? So there's 2 sides of the equation. Okay, who's borrowing and who's lending? So if you lend somebody money for 30 years, you should be compensated for that risk. If you borrow money for 30 years, you should pay them for the risk, okay? Now, peg this. It's not really pegged, but let's peg this so that let's say it doesn't move. What happens when the Fed raises interest rates? this end shifts more than this end. So I'm going to peg this one. So So the Fed raises from, let's say, 2 to 4 to 6 to 8 and 10. Interest rates have been even higher than that over time. So imagine it now looks like this. Okay? An inverted yield curve is more like this, where the short-term borrowing costs are higher than a long-term investment. Okay? So we live in a flat world now where it looks more like this, right? Versus, right? Are they the same? This lower one, let's call this sample A, which is more traditional, not beautifully drawn, but more traditional, and sample B, where we are now. Are they the same? No. First of all, we're at historically low levels. And then B, and then the second thing is A levels are significantly higher, which I guess is the opposite of what I just said. Okay, so we have an inverted yield curve, or at least it was for a little bit. I'm not sure about today specifically, okay? But let me ask you, are we in a situation where borrowing costs are higher, are so high that your borrowing costs, just to do things like buy your inventory, are higher than your profit margins? Is wage inflation ridiculously high? No. Right? Like, no. The things we worry, people are so worried about an inverted yield curve, but they're losing sight of the actual economics. The actual economics is companies cannot make a profit, but they're selling stuff. They just can't make a profit. And they're having trouble hiring people, and they're paying them way too much money because they're desperate to find workers. Well, we might have that, but do we have the wage inflation? No, there's no wage inflation. Energy prices, I mean, look, we're at $60 a barrel, not 120. Remember those days? Right? And so on and so forth. So I think if you do the economics, if you do the fundamentals, sure, we have an inverted yield curve. But an inverted yield curve at 2% is not the same as an inverted yield curve at 6.5%. K-Star says, hey, they're just making headlines, aren't they? I don't think they understand the difference. I think the vast majority of people know the very, very, very basics of, in my textbook, it said inverted yield curve. And that's it. That's all they know. Inverted yield curve. And that's as far as their knowledge goes. Yet, they manage $1 billion. So I don't think it's like the media hyping it up. I just don't think people are that smart. But that's for us, though. If everyone was that smart, and then we'd have such an efficient market that prices would always be precisely correct or nearly precisely correct. And any mistake in the market would be arbitraged out almost instantly. We'd have this perfectly efficient market. That would suck for you. That would suck for me. That would suck for all of us. Because you would never be able to make any money. The market would be basically stagnant because it would always be perfectly priced. Okay? This inefficiency, for example, with the Fed, can strengthen the dollar, can weaken the dollar, just like that. And then it's overly strong, then it's overly weak, and coming back around and doing this and doing that, right? Or the yens. The yens are going straight up, and then they're coming straight down, and it's all over the place. But this inefficiency allows us as retail foreign exchange traders to take advantage of the volatility and the movement it creates as it tries to find fair market value. But nobody can agree on what fair market value is because, I guess, asymmetric information. I think we know more than they do. They think they know more than we do. They make their best decisions. We make our best decisions, and the markets move. Okay? So I'm just saying, should you dump your positions because the sky is falling? Okay? So how about this? If you were to sit down with your client, your multi-million-dollar client, and they're like, oh my God, I was watching CNBC and Bloomberg, and they're talking about the inverted yield curve and everything's going to crash. We're going back to 2008. This is Japan all over again. I'm going to lose half my net worth. You're like, oh, well, an inverted yield curve is a classic sign of recession. But let's talk about how the inverted yield curve is created and then discuss current market conditions and whether it actually points to an imminent recession. And then we can make a decision together on what to do with your money. And you sit there and you talk about it logically like you and I just did. Cool. That should be your job, right? Wicked smart. Wicked smart. So anyways, that's your job, yo. All right, cool. So what's going on today? Let me do this. We have non-farm payrolls coming up at 8:30. You know what? Let me bring up in the background. I forgot to do something. Hang on. Let's do it here. Okay. Okay. Bring you back. Hang on. Where'd you go? Ah, come on. So difficult with only 2 screens, huh? Life is so difficult. All right, I think we're there. All right. Okay. So at 8:30, it comes up. So I want to go over the sort of the credo, the mental process of setting up trade plans, and then I'm going to show you the scalping technique that we'll use during non-farm payrolls. And then after non-farm payrolls comes out, we have 2 more hours. Okay. So make sure you have an opportunity to ask a question. So maybe write them down as they come along. Okay. And we can talk about technical analysis, fundamental analysis, scalping, spot trading, swing trading, carry trading, whatever. Moving averages, oscillators, pivot points, multiple time frames, fractal geometry, chaos theory, whatever you want. I'm taking a statistics class at Harvard right now, and one of the things I'm doing is calculating linear regressions and standard deviations by hand. So I don't want to talk about that. But if you know the formula for covariance, you know what I'm talking about. Okay. All right, so let's go through this. Boom. Okay, I already went through it twice, I think. Okay. This is an old credo that goes back a million years, an absolute million years, and it's actually output from a business planning retreat I did with myself near the beginning of my Forex trading career. So after I quit my job as a venture capitalist and started trading out of my home office full time, all night, I traded all night, 10 o'clock at night to 10 o'clock in the morning. After a while, and I can't remember how long it was, but after a while, I ran into a bad stretch. Okay. Oh yeah, we can do COT as well. I don't know if FX Street has COT data though. Maybe they probably do. I just don't know. Maybe the moderator can find it for us. Okay. So anyways, I went through this bad stretch, and and it's early on in my trading career, so I'm staring into the abyss, wondering if I should quit. And I asked myself, I had been successful in pretty much everything I'd ever done. So I asked myself, what have I done in the past that led to success? Okay. Two things. I always had a business plan, a specific, measurable, attainable, realistic, and timely plan. And I always surrounded myself with like-minded people. So I realized those are the two things I needed to do. The first reaction was I started FX Bootcamp to surround myself with like-minded people. And that's how I found FX Street, actually, looking for other retail Forex traders because I'd never met one. And the other thing is I sat down and I did a business plan. And it took me 2 weeks, actually, to do it. And I spent one weekend at a Ritz-Carlton actually hashing out a lot of this stuff. I just spent preparation time before actually going. But anyways, the output of this is sort of a mantra in the sense of purpose, right? Some people think when you go to your charts every morning that you should make as many pips as you possibly can. That's kind of like a company saying, our goal this quarter is make as much money as we possibly can. It's not really specific, measurable, attainable, realistic, or timely, right? So I had to break it down like a business. And the output of this is like, what is it that we actually do? And I realized that money was my product, money was my service. Because I actually asked myself, like, what is it that I do? And I buy and sell money, which is really interesting, right? I buy and sell money. So what do I do when I lose money? Well, I lose product, I lose inventory, I lose the capability of making money. So it's sort of a double-edged sword, if you will. Losing money is twice as bad, if not 10 times as bad, as making money is good. So I realized the number one goal is to preserve capital. I have to do that. It's even more important than making money, okay? To preserve my capital. And you could break that down on a daily basis or even a trade-by-trade basis. And I started analyzing my trades and stuff, and my output of this was, if I wasn't absolutely certain I was going to make at least 30 pips or so, 30 to 50 pips, I wouldn't take the trade. Okay, this doesn't count scalping, and back then I didn't scalp. I was just a spot trader, right? So I said to myself, if I wasn't certain I can make 30 to 50 pips, then I just don't take the trade. I just preserve my capital. Because what if I lost? I took the risk and I lost money? Oh my God. So I had to sort of filter all my trades. If I wasn't certain, doesn't mean I made the money, but if I wasn't certain, then I wouldn't take the shot. Now, how would I be so certain? Well, I did a trade plan. I had a really good trade plan. And that really helped. So suddenly, every time I pulled the trigger, I had already spent at least an hour doing a trade plan. And that's actually true. Every single day before I even opened my charts, I had spent an hour analyzing the market based on volatility numbers overnight. So I had a routine and a process. I spent an hour before I even looked at a chart, and I already knew exactly what I wanted to trade and whether I wanted to buy or sell. So a chart only helped me find the specific price. So that was really good. And the timing, of course, right? Price and time, that's all it was. But I already knew what I wanted to do. And obviously, my results started to improve again. Then I realized, once I make these trades, I have to manage risk and then remove risk and then lock in a small profit, this capital acquisition. And I remember doing this. I started looking at sort of volatility in my own returns. And I forget the method I used, but I remember finding it. It was really an interesting process where if you took all my unusually large winners, let's say the positive outliers, and then you took either the negative outliers or just the aggregate of the negative, if you will. That's probably the better way of saying it, because at that point, there wasn't too many bloodbath days anymore, right? So you take the aggregate of the negative. So let's say you index that in of itself. What is that? The average loss, the standard deviation of the average loss, and all this kind of stuff, right? Versus the positive outliers, and they essentially washed each other out. What that means is all the boring, pissy little trades that barely did anything is what paid the bills. It's what paid the mortgage. It's what put, paid for a vehicle large enough to hold 2 car seats, right? That kind of stuff, right? It made the money. The money as a Forex trader. You want a yellow Lamborghini? It comes down to your average. Not making quick money and big money and taking a big risk and throwing in a big lot size and making fast, quick, big money. That is not the path to a yellow Lamborghini, as you probably have seen on YouTube. Right? The career money is the boring, pissy little average trades. Okay? Forex should be boring if you're doing it right. Okay? Right? Again, your big winners only, you'll have less big winners than you have little losers, right? So you have lots of little losers and some big winners, and at the end of a year, if you add them together, they all disappeared and nothing happened. So this got me to another mindset of I never need to take big risks. Okay? I never need to take big risks. They're bad because they risk my capital, and my number one goal now is capital preservation. So the next one was get in my trades. I feel almost certain. I feel certain I'm going to make money on these. Remove the risk, and then lock in a small profit. Okay, just lock in a small profit. And then once I got a small profit locked in, let's say 15 pips on my way to 50, then I get aggressive and I go for capital appreciation. Not until I've removed risk and locked in a small profit. Once I have that, then I need to go for the aggressive target. Okay? And ideally, let my winners run. And I learned even further down the line, I learned that sometimes I need to take the 50 pips. Okay? But there are other times where I should be going for 300 pips. And once I made that connection, the big money is not by taking big bets. The big money made as a foreign exchange trader is putting in lots and lots and lots and lots of low risk, highly certain trades based on analysis. And then knowing which ones to take profit on as income and knowing which other ones to let run as wealth generation. And it was a big aha moment where there's times to generate wealth and times to earn income. The difference being income, you basically get paid by the hour. What did you do today? You're working and you get paid, right? You're working, you get paid. You check into the factory, chink, chink, and at the end of the day, they cut you a check. Wealth generation is where your money goes to work for you. And that's what carry trading is. That's what longer-term swing trading is, like weekly and monthly swing trading. That's when you wake up, you get out of bed, you throw water on your face, and your eyes are all blurry, and then you grab your phone, and you open up your MT4 account, and you're like, I've already made 200 pips today. That is wealth. Okay, that's wealth. And you got to get there, my friend. That's where you're trying to get. Okay? That is where you want to get. Okay. If you're new to my chart template or my chart setup, Please take a screenshot now. Please take a screenshot now. Please take a screenshot now. Take a screenshot now so that you can go through and set up your chart the same way, or at least understand what I'm talking about. If you don't want to do all the work yourself and try to replicate my charts, why don't you download my chart templates for free, including all my indicators like weekly and monthly pivot points, daily pivot points, all my profiles, all my indicators with all the right colors, with all the right custom settings. They're available for free download at charts.fxbootcamp.com. 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 Okay? Charts.fxbootcamp.com. All right. Let's go. This is the 2155. They tell me direction of the market. Because the most basic question you should ask yourself before any trade, or let's say the beginning of any analysis, is where is the market going? Is it bullish or is it bearish or is it not? Right on, Stanislaus. I hope that's a compliment. All right. In this case, I'll look at it. 21's below the 55. I'm a bear. Done. Doesn't matter what time frame. I know what you're thinking. It doesn't matter what time frame. It's the time frame you're looking at the moment. So if this is a 15-minute chart, I'd say on the 15-minute chart, the market is bearish. Well, what if on the 4-hour chart, it's bullish? Well, then you lack congruency. Maybe you'll be better off when they both agree. So it's valuable information. The difference between a 15-minute chart and a 4-hour chart I call fractal geometry, because it all contains the same price and time data. You're just applying different algorithms, different lenses is what Harvard calls them. Through what lens are you using, right? No, they're not inconsequential, so to speak. Okay, RCATs. Many years ago, I don't know how many years ago, maybe at the beginning of Non-Farm Payrolls of this webinar, I'd have to double check. Probably even longer than that. So we'll say maybe 15 years ago. Is it really only 13 minutes? Okay, thank you. Maybe 13 years ago, I was pondering why 2060 works so well. So I used 2060. And I wondered, and at that time I was trying to teach myself Fibonacci. And it occurred to me that they were pretty close to Fibonacci numbers. And I thought, I wonder if it had to do with Fibonacci. So I changed my 20 to a 21. I changed my 60 to a 55. Remember, I'm self-taught, so you might say, well, why did I use 60 instead of 50? Well, I used 50. It didn't work very well compared to 60. So I used 60. So I changed 20 to 21. I changed 60 to 55, and it worked pretty much the same. So I said, I wonder if it's that. Of course, it's not, but it just felt good that they were Fibonacci. So I kind of did it on purpose because it seemed smart, but I don't think it's really that meaningful. Then I used the 5 and the 8 to measure price. So this is the market. This is price. So what's the market doing? Oh, the market's bearish. It doesn't say in the moment. It just says in general. In the moment, price is bearish. Price is not bearish. Not bearish. Not bearish. Not bearish. Bearish. Not bearish. My job then is to line these two things up. Okay? That's what I'm trying to do. 200 EMA is a fair market value. Bollinger Bands can be used for volatility. Okay, so I can actually calculate these by hand. If you gave me a scatter plot, right? All I have to do is come up with a linear, right? A linear function, or measure the slope of a mean line. And from that create deviations, but I'm not going to do that for you today. And then I use MACD. I slow MACD down to measure overbought and oversold conditions for the market, and oversold, right, and overbought conditions for price. So I separate market from price using oscillators, market from price using moving averages, but also I'll show you later today, I separate market from price using pivot points and support and resistance. Crypto says, I also use an 800. I looked at 800 or something. It was like an 833 or something like that. And I think it worked really well, like on a 1 minute chart, but I can't remember. It was a long time ago. And all it was doing is replicating a different moving average on a different time frame. So I felt like it was kind of just a coincidence, a little bit of a trick. So I stopped using it. Yeah. Okay. All right. So here's the scalp, guys. Here's what we're going to do. The news is going to come out, right? I don't even know what we're expecting. I guess we'll take a look. I pulled that up. We'll cover that in a second. But let's say it comes out 155. Great. Market's going to move. It's either going to move up or down. We don't know. But we want to take notice. And in this example, on a 1 minute chart, the immediate reaction was down. So let's say the first 5 minutes was down, right? All we need to do is take note of that and say, based on that information, we want to be bears. Oh, sorry. You know what? I screwed this up. Hang on. I got ahead of myself. Sorry. You'd think I've done this 156 times. I should have it down by now. What I meant to say is on the 1 minute chart, the initial reaction, you see this? The initial reaction is up. Okay, great. So the first thing we say to ourselves over the first three or four minutes here is the reaction is bullish. We are now bulls. Okay? You got that? We don't bet before and we don't jump in 10 seconds after. All we say is, I guess we're bullish. So 1, 2, 3, 4 minutes later, we get a red candle. Why is that important? Because bulls buy low. So the initial move only tells us what direction we want to go, up. Now we need a retracement and a pullback, and then start to look to buy it. We want to buy a dip. That's all that is. We take note by marking the top line here because that'll become important later. I call that the line in the sand if you've read my book. Okay. Then I use a Fibonacci tool to measure left, right? So the first thing is typically we want somewhere in this area to buy, but I also look at this role reversal area here, okay? And then I would probably look at this one down here, okay? And most likely this is the logical place to buy, right in there. That's where I get my finger on the trigger. And, well, it didn't work out exactly the way I wanted. But remember, there's plan A. Plan A is most ideal. I definitely would have my finger on the trigger here. But turns out in this case, it wasn't perfect, but it came down to plan B, which was also a 786, which is not ideal, but acceptable. And then notice, it held for 1 minute, 2 minutes, 3 minutes, 4 minutes. So somewhere in here, you should be long. There's not going to be enough time for a committee meeting or a group hug. Once you decide to go, you need to go. And now notice if you went long in here somewhere, your stop just needs to be a little bit below there. You're only risking 20 pips. It's not that big of a deal. If you lose a lot of money, it's because you screwed up. Don't blame the market. You should never lose more than 25 pips on a non-farm payroll scalp. Okay? So once you get here, so you bought in here somewhere. Once you're up here, right, only one of two things is going to happen. It's going to break and head up and you'll get paid. So move your stop to break even. Why move your stop to break even then? Because the other thing will happen is Whatever caused this to be resistance works again, and it comes down. So this is, I don't know, let's say it's a 60% chance it goes up, 40% chance it goes down, up or down, okay? So you face a lot of risk, and you need to manage this risk. So move your stop from -20 to 0, or -1 is what I prefer. This, okay? 1 minute chart's fine. Once this move is over, guys, then we'll switch over a 5 minute chart and redo it again. And you'll see that the 1 minute chart might do this, 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 but then the 5 minute chart's going to do this, this, this. Okay? And they're both going to have pullbacks for you. So if you missed the first one, you'll probably get the second one. Don't worry about it. And then the real line in the sand, right? We're approaching that. Your stop's at break even. If it breaks, you get paid. If it reverses, you had an opportunity. In this case, it broke and you got paid. Okay? Remember, it's a scalp, guys, not a big deal. Don't risk a lot of money. If you don't know what you're doing, go to tradersway.com, open up a demo account and practice. But let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Okay? We will, just for fun, go to, well, euro dollar is like nothing. Anyways, how much time do I have? I still have 5.5 minutes. I've got a couple of things I want to cover first. Okay. Average hourly earnings are going to be more important than the headline. So consensus is $1.80. I think it'll either come out a little lower than that, actually, like $1.55, or it'll come out like $2.55. Okay, because remember last month it came out at 20 and I started laughing. So they're going to have to revise that sucker big time. So maybe look for a big revision from last month. I don't think the headline matters that much unless it's so different. People will think it's going to influence the Fed. But the Fed's not interested in full employment. They're interested in wages. Okay, so if there's a big jump in hourly earnings, that'll be more important than the headline number. Headline number, I think there's a, let's say, I think it'll be not quite 180 or significantly more than 180. No joke, like 255. We'll go from 20 to 255 or something. So, you know, just be careful. Like the unemployment rate, right? So year over year average hourly earnings, if that goes to 3.6, okay, that's inflation. That's what the Fed cares about right now. Okay, not the unemployment rate, not really your jobs, because all of this is basically trend. This was a screw up, the 20K, so I don't think we'll learn anything specific about that. Oops. Okay, so don't get too caught up on the headline number. Oh man, where did it go? Don't get too caught up on the headline number. No, it doesn't click back. I have to. Cool. So I'd like to remind you that I spend about an hour and a half every day with Traders Way clients in a live webinar. You're welcome to join. It's absolutely free. Even if you only have a demo account, you can join me every single day for about an hour and a half every morning, right before the New York session. Please visit tradersway.com and open an account and join me on Monday. It's in your back office. There's a little button that says live webinars. Feel free to join me then.
Prior, which was only at 20.
This is TradeTheNews.com.
Employment expected to remain at 3.8% in March. A minute to the data. March payrolls and unemployment data in just 2 seconds.
This is TradeTheNews.com, by the way.
$196,000 for non-farm payrolls, $196,000.
Not bad.
$77,000 expected prior by slightly higher to $33,000 from $20,000. Unemployment at 3.8% is in line with expectations. Our earnings at 0.1%, 0.2 lower than expected month-over-month, year-over-year. Also 0.2 lower than expected at 3.2%. Weekly hours taking up 0.1 to 34.5 as expected. Participation rate dropping 0.2 to 63% from 63.2% expectation. Private payrolls 182,000 above 177,000 expected, with the prior buys 3,000 higher to 28,000. Manufacturing payrolls at minus 6,000 for March, below plus 10,000 expectation. The back month buys lower to 1,000 from 4,000 for manufacturing payrolls. Canada, net employment change at minus 7.2 thousand, below plus 6,000 expected. Unemployment at 5.8% is in line with expectations and flat the prior month. So again, non-farm payrolls better than expected, 196,000 above the 177 expectation, with the prior month revised 13,000 higher to 33,000.
Look at the drop in hourly earnings.
Expectations at that time.
Look at 3.2 versus 3.4. Hourly earnings down. That tells us there's no need for the Fed to raise interest rates, huh? Remember what we talked about? No need for the Fed to raise interest rates. That should be pretty good for the stock market. And why is that, you say? Well, those borrowing costs will stay low. And that keeps companies profitable. Okay, remember the line in the sand is up here. I'd say at the end of this candle, you should move your stop up to break even as you approach the line in the sand. See, it has to be a little closer. Yeah, all right, move your stop. Gooplang, nobody cares about losing Yeah. You're clearly not following the rules of engagement, so therefore, I don't know. Okay, here it comes. Be careful. That's why you need to move your risk. Remove your risk as you approach the line in the sand. There's a reason for all this madness, guys. Remember, you have an opportunity, but it's okay to break even because you had the opportunity to make money versus not having an opportunity. Dub, I don't trade in this, the scalp. I'm only showing you what you should be doing. I was very clear. I built a PowerPoint presentation before showing you what you should, how you should trade if you're going to scalp the news. Okay, this is a 1 minute chart. Okay. I'm not trying to get you into a trade. I only explained how you do a trade plan based around a high volatility event driven strategy. I am a trend trader. I prefer swing trading, not scalping. Kevin's like, yeah, it's the same, right? It's the same trade every time. Absolutely. So this is why you move your stop, because of this situation. So you're pretty close to busting out here. If you can survive this, it's going to be because of this area. If you get knocked out here, I'm totally fine with it. If you're still in it, you're still in it by the skin of your teeth, right? Oh, that's all right. Yeah. Yeah, I'm not here to give you rah-rah speeches to get you to trade more. I mean, imagine a broker that is just trying to pump you up to trade more. That'd be terrible, right? Right? What a terrible thing. So instead, I'm trying to teach you how to trade with your overriding goal of teaching you over the course of many different scenarios how to trade plan, how to analyze and manage risk properly, hopefully so that you can become a better trader, a more successful trader, a trader that can continue to trade for many, 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 many years to come. And if you find that valuable, maybe you'll pay it back by choosing Trader's Way as the prime broker to your successful Forex trading business. I think it's a better business model. Yeah, so now, like I was saying before, now we got to switch over to a 5 minute chart and see if it gives you the same setup again. Okay? So if you're not actually knocked out of break even, you're very, very, very close. Depends if you got in at the 786 or not. If you got in that close, you deserve the pips if it goes positive, and it still may. I mean, we're only testing this, right? Can't grab this. We're only testing this. So on a 5 minute chart, this is still the first setup. Remember, the first setup for a 5 minute chart is this, and then this, right? So we're still waiting for that. I think with the revision and an upward revision, a better than expected headline number, but a downward drop in average hourly earnings, it's not a good NFP. It's not a good one. Like, people are not going to trade it the same way, and not even for the same reasons. I think the smart money is trading the drop in our average hourly wages, right? I think the dumb money is trading the headline number. Yam, I'm representing tradersway.com, so I would recommend them. Okay, see the giant logo and the whole thing where it says Traders Way, please visit Traders Way at the bottom of the video? Yeah. Well, on this one, there isn't, right? Well, Gopa Lang, if you don't follow rules of engagement and you lose a lot of money, why would I have sympathy? That's all. You're not following the rules of engagement, so you're not on my team. If you're not on my team, why would I have an emotional response? So if you lost money, I have no emotional response. I'm not laughing at you or making fun of you. Yeah. So anyways, here's where we are, and you can see it's clear as mud as far as trend, right? So over this period, we have this kind of going on. And in this period, what we had this going on, and then in this period, we have this going on. So it really comes down to whether you're fundamentally a bull or a bear. A bull is looking at this as higher high, higher low, and then eventually work your way up here, right? But a bear doesn't agree with that. So a bear is either looking, there's only two things a bear can do here. Okay, look for a lower high, and you do it off of this roll reversal area. But more obviously would be a double top. So bears want this to go down here, or bears are going to want this to go down here. And bulls are just doing a 1, 2, 3 scenario, right? So there's only one bullish entry on this higher time frame, and there's two bearish entries, okay? RCATs, that might be true, but you got to be careful though. If you're trading by the seat of your pants, putting yourself into situations where you're losing lots of money, you are not following rules of engagement, so therefore you did fail. So like you said, it's not the idea that you fell, you just didn't get paid today. No, you totally failed. You got yourself killed, right? You ran into a landmine field. You got killed, you did something stupid. So there's no grace in that. Now, if you're really working on your trade plans and you had a good trade plan, you analyzed it, you were patient, you're disciplined, and it didn't work out, then you're like, hey man, sometimes the market conditions change, or sometimes you get unlucky and all that kind of stuff. Hey, dust yourself off and create another awesome trade plan. If you're just throwing down lots and trading like a video game, no, you totally failed. Absolutely, and there's no honor in that. So we got to be careful, right? So let's take a look at some more obvious sort of things, okay? Okay, what was the plan for the week? The plan for the week was buy it here, exit here. See, that's why I prefer trend trading and swing trading over scalping. So whether NFP moved the market up 40 pips and down 40 pips, at the end of the day, like, who cares? Because the long-term fundamentals versus a short-term news release. right? Long-term fundamentals are much more important. But anyways, this is a very basic swing trade, okay? Your entry is here. Your exit is here. We know that for certain, okay? And because of when it hit the target, we expect a retracement back to the central pivot, which is actually way down here. So we knew this on Monday. We knew this on Wednesday. And we still have time left here on Friday to head down into here. It could happen. It doesn't have to happen. This is a counter trend trade, right? This is a swing trade, and this one's boring, straightforward, absolutely, totally standard, right? We do this all the time. The counter trend is sort of like optional. It's probably going to head down. Why? It's a bullish exit. So it's not really, on a medium term, it's not really a medium term sell. It's a short-term sell, only because we know bulls are leaving. So a short-term bear can take it down, and you'll be fine. You might get down here, maybe it stops here. We don't really know. And then what you're actually doing by Wednesday afternoon to Friday is actually setting up next week's trade. So anyone that bought this is going to buy probably today and probably in here or in here, which gives you something very basic. Let me get out my other pen, my blue pen. Come on, blue. Okay. So now this sets up plan A, a bullish plan A, and a bullish plan B. Okay. I would do that 10,000 times more happily than a headline scalp. So let's just be clear. Right? Over a 40 pip scalp versus this, I'd do this gleefully because it's conservative, it's repeatable. In these trades, we often set up 2 or 3 days in advance. That's what I'm saying. Like, your trading should be boring. You should be waiting for Monday's trade. If you're not, like, let's put it this way. If you are not already setting up Monday's trades, somebody else already is, and they will beat you. Okay? Oh, Marina. Yeah, Marina, you took the counter trend, right? We talked about that on Wednesday, didn't we? Yeah, right on. So, but what we talked about on Wednesday is actually what we're talking about now, right, Marina? Where this is a sell. This is I'd say this is the conservative target. This is the medium target. But if you're a long-term bear, this is the target. But see, what we're talking about on Wednesday is not that. So Marina's short here, which is great. So my thought or my addition to that was, if this is more bullish than bearish based on this. Okay. So therefore, if it heads up here, it's very bullish. If it heads up here, look what you're actually setting up. Does anyone see that? Okay. You're setting up an inverse head and shoulders. So I don't think it's going to come down here. Remember, again, it's not me thinking it per se. The way I read the charts, because of this high, I am not projecting a low way down here because it's lower than this left shoulder. So it's actually a lower low based on the short term. Okay. So therefore, because the market is currently bullish, more bullish than bearish, that I'm setting up a plan A and plan B. And you could actually do it today, guys. Even though this is next week's setup, I would do it today. Which means I might buy it here if I were me, or I might buy it here if I were me. Down here, I'm not really interested. Okay. Isn't that cool, guys? Now, the funny thing about this, right, is we set this up last Friday. So I run a swing trading group. So a group of people meet with me every Friday, and we set up swing trades that you can take on Friday or Monday or Tuesday. So we're setting up trades as much as 72 hours in advance. And these trades are 200 pips each, let's say. So on the Friday, we set this up as a buy, and we had talked about hitting the target early in the week and setting up the counter trend trade. So on the Friday, we're like, well, if we hit this Tuesday or Wednesday, then it's coming back down for a counter trend on Thursday, and we're literally setting these things up 1 day, 2 day, 3 days in advance with the counter trend trade, and then setting up even the next week after that, because that creates a higher high, higher low, higher high. So we're actually like as much as 8 days in advance. Okay. Who asked it? Zoab Khan says, why not just, what are you saying? Why don't you pound or in downtrends? Why even bother buying? Okay, it comes down to the time frame that you're looking at, okay? So you say this is in a downtrend. I say this is sideways. Okay? So if it's sideways, you buy its support, right? This is a MM2. A blind man could buy that. Okay? Zahib? Mr. Khan, right? So that's how I look at that. Because it's not trending, right? I mean, even the S1R1 would be a good play on this one. And it's also, as a swing trader, you just kind of have to do it because it is the proper price. Okay? And if it drops below this, I lose money over the course of 1 day. So I lose 50 pips. Okay? But notice it's also a WM2. So I can't help myself but buy that. Okay? So it's just a setup, right, Con? It's just a setup. I don't know. It's not necessarily bearish. It's not necessarily bullish. But I got a cluster of weekly, monthly. I mean, I just kind of have to. Okay? Doesn't mean it's going to go up forever. But if I was a bull, buying this dip to the central was also very logical. And then taking profit here is very logical. So if I was a bull here and a bull here and I took profit here as a bull, I'm going to want to do it again. So it's going to do this. Is my new plan. Why? Is it right? I don't know if it's right. But if I was a bull, that's what I would do. Because those are bullish trades. Right? Right? So that's all, Con. Now, another argument on the bull side is, what would a bear do? A bear was supposed to sell here and they didn't. So if there are bears, they're gutless. So what is more likely to happen is we return to the top of the range. And all we are doing, because you said it was downtrend, I'm like, no, I see it range bound. So I also have it filtered where we're essentially just going back to the top. It's not bullish, it's not bearish, but if you're going to start April at a MM2 cluster at the bottom of the range, you just have to do it. And where are we going? We're just going to the top of the range. So it's not even a bullish trade plan. You see that? It's not even a bullish trade plan. It's just a range-bound trade plan, SpongeBob SquarePants, right? And then I'm folding in weekly and daily trades into a monthly swing. That's all. Okay? Well, see, let's deal with the language. You say, I think it will go down. I don't think. Okay? I'm just doing the analysis. I don't have an opinion. Okay? This is just where bulls take profit. It hasn't even turned bearish yet. I mean, I guess you'd argue something like this. So in that case, if you argue that, I would sell this on Monday if I was a bear and I was convinced that this move here was a lower high, but even then, we haven't made a lower low yet, right? So where's the lower low? I mean, way down here. So I'm not disagreeing with you. It's just not on the charts. It's not technically bearish yet. The 21 is still above the 55. We still haven't made a lower low. The only reason it's falling is we hit a bullish exit, which tells me there's, let's say, in my humble opinion, there's still a greater chance bulls buy it back because they bought it here as they were supposed to. They took profit here as they were supposed to. So in my mind, there is clear evidence of bullish activity, and they will return to the market. And they're about to. You see what I mean? So to me, you might be right, but it hasn't been confirmed with the lower low. So I think there's still higher probability of up here or up here. And I will have to create a trade plan based on that. Okay? Correct, Marina. So I'm just reading the charts. Now, if you want me to think, then I do fundamental analysis and I talk about seasonality and all these other things. At this point, strategically, we're only looking at a chart. How about that? Nothing on these charts tells you up or down. So if you already know you're a bear, and so let's say Con already knows he's a bear. Okay, then you do the trade Marina did, only because you're doing a counter trend trade. But you're also expecting to take profit here because you're not going to make it down here or here. You're just not. And then, so take your profit, and then maybe you get another chance to sell here, in which case your probability is much higher of heading down. And even then it hasn't broken. So once you get down to support, you should take profit. And then if you break support down here, which is now a third plan, if you right, then you have to trade the retracement. So it's like you sold here, take profit here. Sell here, take profit here. Sell here, let it run. Once again, remember I talked about it earlier, the secret to Forex is knowing which ones to take income on and which ones to set for wealth. Okay? Well, I guess kind of a better way for you to communicate with me is you would say, well, based on my analysis of the daily chart, I see a such and such and such a thing. Okay? But even if you're a bear here, all we have is a double top. That's not enough per se for a reversal. That's just a reversal pattern, but it hasn't even created a lower low yet. So you'd have to say, well, on a daily chart, right, I anticipated a reversal, and that was confirmed with the double top. So now I'm setting up a lower high off of a double top, okay, on a monthly M3, set up, right, with a weekly M4, and therefore the target is MM1. If you said something like that, I'd give you full credit. What you're saying, right, like you think it's going down or you feel it's going down or all that kind of stuff, like that, it's meaningless. It doesn't mean anything. You have to show me your analysis, right? So we don't want opinions here. Opinions are for like debating Fed policy based on macroeconomics or something like that, right? But when you're talking about a trade plan, you have to say, well, it's on a daily, it's a double top with a lower high off of an MM3. Therefore, based on that, my target is MM1. And I'm like, got you, brother. Nailed it. I totally get what you think. Okay? Good. So much better. Oh my God, I don't want your analysis. Don't email me, dude. Yeah, don't email me. I'm just communicating. Don't worry about it. I'm not saying you're good, bad, or ugly. I'm just, as long as we're communicating, right? Please let me know how I can see more of your webinars. Okay, Ralph, visit tradersway.com, open an account. Even a demo's fine. Take you 30 seconds, maybe less. Then in your back office on Monday morning, click on the button that says live webinars. Okay? And I'll see you on Monday. Cool. So that's Beast anyways. Let's move over to gold. Cool. Gold. 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 Looks like support. Does anyone want this to go up? Well, it's not a very good setup at the moment, but if you want it to go up, you're looking for this here. That's the beginning. Okay, that's next week's trade. See you, Marina. So I'll see you Monday, Ralphie boy. Crypto's been with Traders Way for a year now. No joke. Right on, man. Anybody a buyer? What's the trade plan? Double bottom. You're going to have to be a bull already because there isn't anything bullish here on your chart. So you're going to have to be fundamentally bullish. Okay. But if you're fundamentally bullish, now you're looking for setups, right? Well, a double bottom is a reversal trade plan. It hasn't reversed yet. This still says down. If you're a bear, it still says down, but you're caught up here. So as a bear, you should let it break and then sell the pullback. You shouldn't be entering new trades now. Your trade was on Friday last week. If you were already a bear, that was it. Okay, great. So now if you're a bull, it starts at the double bottom. So now, since we're at a double bottom now, let's set up next week's trade if you happen to be a bull trying to buy a double bottom. Up to the 55, down to the support, up through the 55 to the 200, down to the support, up into the target. There's next week. You're done. Okay. If you are a bear, as Dougster mentioned, well, where's the bear's setup? Well, the most recent one was here, and that's all there is. Okay? So the next one for you, Dougie, is if it does this, and then you sell that. So there, okay. So you missed this one, I guess, or maybe you got it. And then this is your next one. Okay. See, you're riding the 21, so this was potentially a trade, this was potentially a trade, this was potentially a trade, but each one is less and less good. So the really boring sort of low-hanging fruit is let it break, let it pull back, and sell it there. But do you have this, are you the strength to be patient? Okay. Takes a lot of discipline to wait that long. You probably won't get a trade on that till Wednesday. Okay. But it'll keep you out of lots of losing trades. And then, of course, look, again, talking to the bulls now. If we come up to this 55, this 21 is dead. It doesn't exist to me. Vamos, son of a bitch, if you know Jay-Z. If you know Jay-Z, right, anyways, that hits the 55. The 55 now predicts a double bottom. So then it comes back down into here. And then this M2 predicts M4, which is here. Okay. So I have multiple things going on. And that then creates a long-term shot to here. It just won't be next week. So I already have all of next week planned. If you don't have all of next week planned, almost day by day, then you should seriously consider joining the swing trading group at FX Bootcamp. You're going to have to go through training courses. You're going to have to go through performance analysis and one-on-one coaching. And once you know how to trade, you can join my swing trading group. But on Fridays, we plan all of next week. So I look at this, and I already know what I'd like to do the next 5 days. And if you're stuck here trying to figure out what you're going to do the next 5 hours, you're going to get your butt whooped. That's all. That's all there is to it, right? An honorable general is victorious because many plans have been made. You don't walk onto the battlefield against me and wing it. My army will destroy your army. Okay? Because I have a contingency plan for everything. Brian, I have 4,000 videos associated with my work on YouTube. 4,000. It's a lot of videos. Okay, we're in a sell zone here. CAD news was bad, right? But anyways, you're right, I'm a one-man army. Oh, yeah, good luck. Good luck. Good luck. Yeah, nonsense over there. Let's do Swissy. Now, with Swissy on Monday, I talked about this working its way up to here, okay? Then down to here, then up to here. You understand that? Once again, I have all of next week done. So even if you don't learn from me directly, even if you don't come to my daily webinars, even if you don't take any of the courses, let me at least hope that you've learned that you can and you should plan that far in advance. Okay? Right? So even if we part ways and you never see me again, I want you to at least walk away with this idea that I am planning on for Wednesday and Thursday. I know what I'm going to do Monday and Tuesday. Then I'm probably looking at counter trend trades Wednesday and Thursday, and then setting that up for what may follow to that. So for example, if I were to try to go out 2 weeks, I think it's going to do this, let's say. So I can guesstimate 2 weeks from now. Okay? And that's just technical analysis. Now, fundamentals, right? Crypto News says I personally go for a year. Well, I have fundamentals that I also take into play. So that's just different. I'm just talking about technical analysis, right? Okay. So what would you like me to cover the rest of the morning? We're about halfway, right? We're in the third half. What would you like to cover today? Yeah, nothing's happening Euro USD. I can see it's right there. We're stuck in the range. It went one standard deviation above the mean, one standard deviation below the mean, and we're now at the mean. Okay? There you go, Lim. You go, Shawnee boy. Fundamentals. Well, that's a big, broad question. It would be helpful to me if you're a little more specific. Interesting, though. Hi, Wayne, USD Swiss franc. We did that just like 12 minutes ago. Okay. This was my plan earlier in the week, that it would go up, it would come down, it would go up, come down, it would go up. Okay. Actually, no, it's not going to do this. Well, it's going to try. It'll probably, let me redraw this to be even more realistic. Okay. Let's say down, up, down, up, down. How about like that? And we'll revert the other way. Because here's the bigger plan, right? Oops, I want to do this with arrows. Come on, dude. How many times do I have to click? Okay. Do this arrows. Down, down, down. Up, up, up. Down, down, down. That's what's happening. Okay. That's all. That's it. It's a pretty simple little move. The thing is, you don't see these things if you're not planning on medium to long-term charts. If you're stuck on a 15-minute chart, you won't realize that this 3-week upward movement is actually short-term. So a couple of questions here about volume. There isn't a perfect way in the foreign exchange market to measure volume. Each broker has different liquidity providers and so on and so forth. So volume used in, let's say, futures trading is more reliable because all future contracts get traded over the exchange. So the exchange has perfect data. Well, brokers use different liquidity providers. So no two brokers are the same, and you're not going to get the same volume and volatility data, or volume data, right? So let's say a more consistent way to measure that is to substitute volatility for volume. It's not a perfect substitution, but if you needed it, you can substitute. Okay. Now these Bollinger Bands measure volatility, like 2 standard deviations over the mean, right? Just like that regression channel I showed you. There's an average period in here, and I believe it's a 20. And then 1 standard deviation above the 20, 1 standard deviation below the 20 for 2 standard deviations. Unless maybe it's 2 standard deviations over their mean. Actually, you know what? That's probably what it is. So it's 2 standard over. So 2 standard deviations represents 95%. Okay. 68% is 1 standard deviation. Right, 1 SD, 2 SD. Okay. Now, if you use Chebyshev's rule, and now you have to Google that, Chebyshev, the Russian statistician from the 18th century, 19th century, from the 19th century. And he'll say that that's all nonsense, that's overstated, and really you should use 75% as your measure. So somewhere between the 1 and 2 standard deviation point. But anyways, when lots of people are trading, right? When lots of people are trading, the Bollinger Bands widen. And then when they narrow, less people are trading. Is one way of looking at it. Okay? You see what I mean? So you can substitute, it's not the same, but you can substitute for imperfect information on volume, substitute that with perfect information on volatility. And you may find that it's a helpful substitute. Okay? But is it really that helpful? So let's say you come from a different world. Let's say you come from the futures trading world or the stock trading world. Maybe you're a stock trader and now you do Forex and you're interested in volume, right? Volume isn't necessary in what we do as retail Forex traders. Let's just focus on the majors, major crosses, and all that kind of stuff, which is what, 40 different assets you could be trading. There's no issue with volume. There's no need to have volume. The market is liquid. We trade money. So by definition, it is liquid. It's not like you need to dump a bunch of your dogfood.com stock and you need to know the liquidity of the market, right? The volume of buyers. You're like, well, how do I know I can unload this block? There might not be enough buyers. Dude, there's enough buyers for your British pound. I don't care what's going on. You can drop your $5,000 position in Great British Pound. You're not going to have a problem. So it's not even really necessary, right? You could drop 10 million bucks on a falling market and still catch a bid. Okay? Does that make sense? Aussie dollar. Okay, let's take a look at Aussie dollar. Oh, Cedric says, so can you use volume in the futures market? Yeah, well, it'll be more reliable because it will be the volume. Okay? Okay, what was it? Aussie dollar? Aussie dollar. Well, you know what? Let's not do this version. Let's do this version. Have you guys downloaded my chart templates yet? Okay. All right. Well, let's start here. Look at the 4 hour. So what's going on? What's going on? Aussie dollar. What's going on? Which way is it trending? No, I was doing venture capital in 2000. I wasn't buying at retail prices. The first stock I ever bought was Apple Computer. And the second stock I ever bought was Cisco Systems. But I worked at both those companies. Not bad. Yeah, range bound. So it's like one of these things, like I always wonder, like when people ask me to do it, like, hey, can you cover this? I'm like, why do you want to talk about this? But, okay, it's range bound. So you're going to have to use a range bound strategy. But before I even talk about using a range bound strategy, you're going to be better off finding something that's trending. So even if you make money here, you're probably giving up a better opportunity somewhere else. You need to be cognizant of that. You're right. So in microeconomics, for example, one of the things you study is accounting profit, right? But then there's economic profit. So let's say you make 20 pips here, but you gave up a 50 pip trade somewhere else. So you're actually now at a loss of 10 pips. Did I say 50 or 30? Let me do it again. If you made 20 pips here, but gave up a 30 pip opportunity somewhere else, yeah, so I said 50, didn't I? So let's do it again. If you made a 20 pip trade here, but gave up a 50 pip somewhere else, you're actually negative 30. Economically speaking, you've lost 30 pips profit because of the opportunity cost. You looked at a piss poor market and decided to trade that versus a red hot market that you should be trading. Okay, so you might have an you might have an accounting profit here, but an economic loss somewhere else. Okay, so that's the first thing. It's range bound. You can trade it, and maybe you're exposed to Aussie and you need a hedge or something. Like we all have our reasons. Okay, but looking at this for like 1 second, I'd say not very good technically. Okay, great. So let's finish marking this up. You can mark it this way, and you can mark it this way. Now, I think we did this on Tuesday in my webinar, and I think I had it going back up. Can anybody confirm that? Wait, I would have done it over here. Let me check something. Where was it? Was it here? It's not here. Is it Aussie? No. Maybe it was here. Aussie. Anyways, I had it somewhere. I don't remember where the analysis was. I'm certain someone could confirm it. That we had it going up on Tuesday. So I remember talking about, you know, you have this one, you have this one of them's going to hold. I think we were here. I'm like, one of these is likely to hold, and it's going to go back to the top of the range. And, all right, so anyways, it's done that. So now what? Well, what am I going to say? It's less, right? It's going to stay in this range forever. Is how you need to think of it. Forever and ever and ever and ever and ever and ever and ever until it breaks. Okay? So if you're shorting here, head down, yeah, your price was actually 71.30. So I don't know how close to 71.30, but we knew that 5 days ago that was the sell price. But the thing is, you would have sold it here, then here, and here. It's your third time in 5 days. But yeah, that's your price. Okay? And now what you do is you let it move sideways forever and ever and ever and ever. Let me see if I can change this a little bit. And now zoom in. Okay. So now it's going to stay this way. Let me remark it. So we have this, right? And we have, let's call it that. Okay. It's going to stay and do that forever. I'm just saying mentally, you're prepared for this to keep going forever and ever and ever. But one day, let's have it break to the upside. It does this. You get a breakout. You immediately shift strategies from range bound, and your new plan, oops, come on. So now your new plan, once it breaks, is buy the dip. Okay? And that's how you do it. So one strategy is stay range bound, so you use oscillators. In particular, stochastics. So if you want to add a Stokes to it, be my guest. And then wait for the breakout. If it breaks to the downside, then you sell that. Okay? Julie says I did. And Underjack, okay, good. So yeah, so that was confirmed. That was Tuesday's trade plan, was to trade it back up into the top of the range. Now we're there, trade it back to the bottom of the range. Sure. Okay. So which means you could kill like weeklies here. You might want to add an oscillator, so we can go insert like that. And just to make sure you know how to trade an oscillator, you don't trade the crosses. You wait till price hits support or resistance and then trade the cross. So just because it crosses doesn't mean you trade. Okay. Now these happen to all be at support and resistance, so each one of these crosses are valid, but it's not always the case. So let's try it on a 1 hour. Let's see if we get it. Yeah, much more noise on a 1 hour. All right, so which crosses do you trade? Well, you look at when you're touching support and you trade that one. Are you at support here? No, so you don't trade that one. Are you support here? Yes, so you trade that one. Are you support here? No. Are you at support here? Yep, this one counts. Because you don't, right? We're using the upper support. Do you do it again here? You can. This one, like, no. Sort of in here. It's all good. How about this one? You see this cross? Do you trade it? No. You see? There's a clear cross. Do you buy it? No. Okay. And the same on the resistance side. So let's just change color to something different. All right. Are you at support here? Suppose this one's a little complicated because it's the beginning of the move. Okay. Right? Do you sell this one, guys? It's a clear cross? No. What about this one? Well, this is the resistance. That's the one you trade. Are we at resistance? No. Do you trade this rollover? No. Are we at resistance? No. Do you trade that rollover? No. Are you at resistance here? Do you trade that rollover? Yes. This one I probably would not sell. It's not quite at there. It's close. It's a judgment call. It's pretty close. Yeah, you probably could. Do you sell this one? No. Do you sell this one? No. This one? Maybe. Yeah, mediocre, right? You see all the crosses that are not tradable and the ones that are. So the most important thing is you buy oversold at support or sell overbought at resistance, but it's not buy because it's oversold or sell because it's overbought. You see? Right? People confuse that. Why is it overbought? Because everybody on the planet's buying it. That'd be a dumb reason to sell it. You'd be the only fool on the entire planet selling. So why do you sell? Oh, because it's at resistance. Why do you buy it? Oh, because it's at support. And oversold or overbought. Okay? If it breaks and re-enters, then trade it again. You're talking about range trading? That can happen. It doesn't happen often. It can happen, and I just walk away. I'm so worried they're going to chase price and stuff. Excuse me. So if it breaks, pulls back into the range, it was a fake out, you know what? It's like a lucky punch. You got, right? Just be happy you didn't take it on the chin. Okay? Beautiful, very clear. Cool. It's cool. Thank you. Now, imagine taking a 25-hour training course. How good you will get. If you just learned something in the last 20 minutes or 10 minutes, if you just learned something new, imagine 25 hours. FXBootcamp.com, baby. Has anyone downloaded the chart templates? I'll give you a hint. In the process of downloading it, you are offered a coupon code for a discount on training. Hint, hint, hint. Okay, this is just day trading. I don't know if you guys day trade or not. You don't know my mind. You don't know my kind. Stock market's open. Stock market's open. Ding, 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 ding. Ding, 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 ding. Crypto's all yes. Hey, what was that $1,000 move in Bitcoin the other day? What the hell? What was that? Ramadan Mubarak. Well, Sam, it's in, right? Is it not in there? Yeah, so for some reason, the MACD that you get with MT4 doesn't include more than one line. It's like the worst MACD ever. And even though MT4 has been around for 10 years, no one's fixed it, right? So, yeah, you'll have to Google that then if for some reason I've forgotten it. I'll have to put it in the bundle. There's an old story. It was funny. I used to trade with GFT, and I used their Dealbook 360. And the default color for the red line was yellow. It was literally called red line, and the default color was yellow. Like, there's a programmer for you. Is that right? Yeah, that crazy. Yeah. So I'm just looking at Bitcoin now for business and such. And last month I had, what was it, 3 Bitcoin? 4 Bitcoin or something? And I'm like, look at me, I got a Bitcoin. And I sat on it for a whole day and I made like $30 on 3 Bitcoin, 3.5 Bitcoin, something like that. And I'm like, this is boring, right? So what I really wanted to see is how quickly I could cash out. So I cashed out, boom, money in my, and it was just instant. It was such a glorious thing. It's such a great technology. Just amazing. But I kind of wish it would have jumped 1,000 pips or $1,000 that day. When you have 3 Bitcoins, that's good money. But the thing is, what if it lost $1,000 in that moment? Yeah, so. Yeah, that's interesting. Well, good for them. The MACD is 21.55.8. So let me change this to show you. This one. Okay. So if you traded with me 15 years ago, this was my standard chart template. It's still completely valid today. There's your stochastics. Oh, sorry, there's your MACD. – 21.55.8. Link to the indicators. Okay. Charts.fxbootcamp.com. Okay. There you go. You don't know my kind, you don't know my mind, dark necessities. So I'm a swing trader, like I said. I love swing trading. Okay. These are dailies. This is a buy zone. This is an exit zone. This is a sell zone. This is actually an exit zone. This is a buy zone. Okay. Sideways, sideways, sideways. I love day trading. And you'll notice that this is a market that's not trending, and that's why you get inconsistent moves, and why it's so important to have a daily trade plan. Okay. So, for example, if you believe we're heading back down to here because you see resistance there, then Monday's trade looks like this. See, I'm done. Okay. Cool. So let's take a look at some more dollar pairs. By the way, to everyone in my swing trading group, I want to remind you that we're not meeting today. We're going to meet on Sunday at 5 p.m. New York time and set up trades for the rest of the week. Sunday, 5 p.m. New York time. Which means if you're going to join our swing trading group, you could do that now, study all weekend, and join me on Sunday afternoon. Okay. All right, so let's go through this. These are all dollar pairs. Take a look at Swissy. This was training that I did for people a few days ago on standard deviations. This was because, actually, this was probably 2 weeks ago because I was still studying for my midterm. Hey, by the way, I just ordered my ring, my class ring. So what you do is you put it on now, because in May, I'm done my 3rd year. So what you do is you wear the ring so it faces, the student puts the ring on so it faces them and gives them the courage and strength to finish their last year. And then when you actually get your degree, you take it off and you turn it to show the rest of the world, right? So I'll be done both my degrees by then. I get my first degree in May, but my bigger degree I get in May of 2020. So it says 2020 on it and stuff. Looking forward to it. Should be good. I'm thinking, you know, when I die, they put me in my coffin, I'll have my wedding ring on my left hand and I'll have my Harvard ring on my right hand, right? Like that would be something they bury you with, right? Your Harvard ring? I think that matters. Okay. So anyways, 2 standard deviations is shown there. There's the mean, there's the 1 deviation, and then the 2nd deviation. This represents 68% of price action over the period, and this represents 95% of price action over the period. That's all I'm explaining there. Okay. And another way of looking at it is the whole thing's moving sideways. Why the heck would you trade it? Come on. Let's take a look at Pig Dog. Pig Dog is very news driven, so I'd be very cautious about trading it because not compared to other currencies, right? Less of the action in the pound is driven by technicals than other pairs. So this could be a rumor. This could be a press conference. This could be a vote to not vote. This could be an article that came out over the weekend, right? Versus just pure technicals, versus big money moving across borders to do business deals. This is more fear than it is intellect. Oh, thank you, crypto. All right, God willing. Okay, so it really depends on how you want to trade this, is what it comes down to. But I think there's a little more risk on this than normal, but the volatility is going to be higher. So maybe you like that volatility. Now, if you're trading 1 minute and 5 minute charts and you're catching these moves, then that's perfectly fine. Okay. But like I look at this, and the monthly play was actually buy it here. Okay. For bulls, the monthly play for bears was sell it here. And this isn't clean. Okay. It's not like it definitely did this all the way up, right? It didn't do that. And it didn't do this, right? Instead, it made a higher high and then a lower low. So it's not a clean kill, so to speak. It's not clean analysis. It's not a clean chart. It had every opportunity to do what it was supposed to do, and it did respond to the proper prices. But the lack of follow through and even the fake out creates a higher level of risk than other currencies that you could be trading, okay? Crypto says he loves trading this for swings, but they're not clean swings. Like, for example, on a monthly basis, this is clean, okay? Let's say you didn't do weeklies at all, okay? So all you did was look at this. Okay, so you're long-term only. Okay, that's fine. You got it. Okay, but look what happens when you're long-term only and not short-term, right? You would have sold here. Okay, did you lose money? No, but look at all the ups and downs you went through that entire month. And now you're selling here, which is fine. It's good. That's a good trade. But it could still do this, as we've seen, right? And then, of course, in 1 second, someone can say there's going to be a second vote on Brexit, or the EU gives them another year to come up with a new plan. Boom. You're just, whatever you did the last 8 weeks was destroyed in 8 minutes. So is that really what you want to do? Or do you want to do long-term, medium-term, and short-term together? And that's what I recommend, is trade all time frames. One plan leading into another, leading into another. And when I do it that way, what the lack of congruency amongst the time frames, in particular the weekly and the monthly trade plans, tells me it's not as clear as you would expect. Now, the algorithms do the algorithm stuff. They just add up the prices and divide by whatever they're supposed to, and they print the pretty colors. But the interpretation is the market isn't actually that sure of what's going on. So yes, this is a lower low, but this is a big retracement. Yes, that's a lower low, but yes, that's a big retracement. And they're not lining up perfectly where they're supposed to. Now, see, that's a good weekly swing. This is a mediocre weekly swing, but it fits within the monthly. So, it's not bad, but it's not great. And then you have this risk. You have this almost like a geopolitical risk that can just snap, kill your month's worth of work. And that may not happen, but you should calculate that into your assessment of risk, okay? Okay. Euro dollar, we've done. Aussie dollar, I think we did. Oh, this is my Aussie dollar. Yeah, this is me. I was talking about popping it back up. All right, cool. And then this is trading it back down. Although I don't see the analysis, so I don't know where we had it. But anyways, this is obviously an area we've been watching a very long time. It should be lower. Okay. What did we not do? Kiwi dollar. Why don't we switch something over to a Kiwi dollar? I then change this. Okay. So what do you think on a daily? Is this going up or is it going down? So it's one of these things like it's kicked off a resistance zone. Okay. So should that make you more bullish or bearish? Well, on the last couple of days of March, okay, we are at monthly resistance. Then on like the last is an M3. On the very first day of the month, CPP. If you were a bear, you caught this. Okay. There's no doubt. If you waited till April 1st and you're at your chart at 4:59 p.m. Eastern time on a Sunday, and you were already a bear. Here's how your plan was. Plan A is to sell at this price. Of course, you saw it on Friday at that price. Plan B is to sell it at this price. Okay? It's supposed to be an N. So you were already a bear. You saw it get rejected at monthly resistance, of course, future monthly resistance, but you also had this on long-term resistance going back like a year. So you're already a bear, you got your price, and then you get the respect. Okay? And this is the rumor now of RBNZ cutting interest rates. Cool. So on the first day of the month, on the first day of the week, you get the exact price you want for your aggressive entry. So you're now done. You understand that? You're done for the entire month of April. Now, it may go beyond that, but for the month of April, you're done. Got your trade, could be more perfect, you're done. The target for this week was this price. So we know short-term bears are going to exit today, which just sets up Tuesday short. Yeah, I know, right? So on Tuesday, you're going to short here. If you shorted here, if you shorted here, and if you're watching this. See? Done! Next week, done. You need to plan more. I hope you walk away from today's webinar saying, OMG, I need to plan more. This dude is setting up plans for Tuesday and Wednesday. And you're going to show up Tuesday and Wednesday and wing it. Oh, whoa. Whoa, you're going to wing it? Bring it on, girlfriend. Bring it on. Because I'm going to win that almost always, right? And I used to say years ago, I'd say, well, that's how you put your kids through college. Well, I'm in college now, so that, right? You're transferring your wealth to Harvard University on my behalf. Thank you. If you don't trade plan, if you just show up and wing it, from the bottom of my heart, thank you very much. Yam, why don't you go to fxbootcamp.com and find out? But like I said, Yam, hint, 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 if you download my chart templates for free, you are offered a coupon code for training. But shh. Thank you, Ralphie. Ralphie's like, oh my God, I need to plan more. That's what I want you to say, Ralphie. Thank you. That's what I want you to do, right? Because now you know. See, I've never had that opportunity to find out like what other people do. I've never had that opportunity. But I know I'm that type of person, like, I'm a hard enough worker and I'm just smart enough that I feel like I can do almost anything if someone just shows me, right? If I only need, just like, what does this guy do for a living? Okay, I get it. I got it. I can probably do it, right? So just knowing, right? So now that you know, you're like, oh my God, I see what I've been missing. And now, whether you work with me or not in the future, at least now you know, and you're going to change your behavior in a positive way. And that's what I'm hoping for out of this webinar. Okay, maybe because of that, you open an account at Trader's Way. Maybe because of that, you take training at FX Bootcamp, or maybe you don't. But I've changed you in a positive way, and I hope it has a positive impact on your trading. I say it every day, peace on earth, because I mean that. May the pips be with you. May your profits be above average. I absolutely mean that. So anyways, cool. Welcome to the family, Ralph. All right, so let's do this now. More requests. I'll take more requests. Sean Lim says, so much to learn. Yeah, and I had to figure it out on my own. So at least you don't have to go through that pain. Let's put it that way. Okay, what currency pairs would you like me to cover, y'all? Euro yen? All right, let's move over to the yens. Pound yen, euro yen. Yeah, Cedric, remind me, when I'm done with the yens, let's go back and do kitty cat, okay? Okay. So, this is still setting up for a trade plan. I did this a week ago, okay? Basically, last Friday. Last Friday, we were here. And then Monday opened here, so we know the swing, right? So if you know how to swing trade, Monday morning, actually Sunday afternoon, 5 p.m. New York time, you bought it here, and this was your target. So you're done. You made money this week. Congratulations, you're a swing trader. But that's not the actual trade. That's not the actual move. What we're talking about, I guess, 9 days ago, was up, down, up, and then all the way back down. So now I'm setting up, right, like this. Monday, Tuesday, Wednesday, Thursday, Friday. That's next week. Beep. Yep. I don't know if you grew up in Sesame Street. Yep. Euro yen. Yep. Okay. All right. All sheep. Okay. This is an exit for bulls. Bulls need to get out. And I think you have a reasonable chance for this. This is an MR1, right? And this is an exit. So combined, that's hardcore resistance off of this. Okay. So if you're a bull, take a walk. You might have bought it here, you might have bought it here, you might have bought it here, you might have bought it here. Good job. Take your money, get the hell out of the market. Excellent job. Get up. Devesh says, stop bullshitting. All right, go find the videos They're all my videos are on YouTube, bro. You can go back. The analysis is there. So if I make you uneasy, I'm sorry. Okay. Yeah, it's definitely ranging, and you see all of that in the price action, right? You see that. So take the money and run, is what I'm saying. Kitty cat. Okay. M2 is a buy. M2 is a buy. Central pivot is a buy. Okay. This, too late. Okay. Here's the thing. We call this an out of position trade. The way you catch it is on a 4-hour. And I don't even know if that worked. Not really. So you either you caught it last week or you didn't. Now, the interesting thing is this setup is a counter trend setup, which is supposed to take you down here. And that hasn't happened yet either. So we're just caught here. So it's literally between a rock and a hard place. Well, no, I guess not literally. Figuratively between a rock and a hard place. I don't know if that makes you more bullish. If you're a bull, you're going to buy this dip like this. Okay. If you're a bear, I wouldn't be a bear if I was me until we did something like that. Okay. So it's the same price. Notice that? Bulls will buy the same price, bears will sell, but with completely opposite price action. Mike is funny. Stop hating, hater. Why would that have to be an extra? Oh, because that's what that is. That's what a pivot point is. Davish, I did this for 15 years. I've done all that, Davish. I have nothing to prove to you. Okay. How about this? Not only have I been Forex Speaker of the Year at FX Street, someone that I trained and mentored for years, then hired as an employee for years, has gone on to also be nominated as Forex Speaker of the Year. So someone I mentored from being an absolute novice at Forex has gone on to be one of the world's greatest. Now I'm talking about David Pegler. That's just one example. So I'm sorry I haven't impressed you, but I have made a positive impression on other people, and I will focus on them more than you. But I'm sorry I don't impress you. All right. So that's CAD. Let's just finish off the yens and then get over to the other CAD. We'll do Kiwi yen. We already covered this earlier. Stuck in a range. It'll probably take a walk. More bearish than bullish. You know, you can do that with a regression, right? So you from, let's say, this period to our period now, more down than up. But it looks like it'll fall and then rise, and it's not. There's something better to do than that. And then beast, yeah, we've done, right? This was the buy on Monday. Here's the buy on Tuesday. And here's the exit Wednesday. Here's the counter trend. So let's do it again one more time. So bear in mind, the free webinars I do every day, I break this down day by day by day. Here's what's probably going to happen next, and probably going to happen next, and probably going to happen. So anyways, this was a buy, right? This was a buy. This was an exit. This is the counter trend. This is the counter trend target. But if you're a bull, this is plan A and this is plan B. I know I'm going fast, but I swear to you, I've done this 15 times in the last 3 days. Right? Is that right, Sean Lim? Well, the first thing you should do is FX Bootcamp. Go through performance analysis and coaching so that you can actually find out what you're messing up. Okay? That's you need to do that. Absolutely need to do that. So on FX Bootcamp, you'll look for performance analysis and coaching. You need to do that. I mean, everybody needs to figure out where the mistakes are before we could even start focusing on fixing things, right? So if you have enough experience to know what's going on, but you're still making mistakes, we have to figure out the flaw before we offer a solution, right? That's why you need to do that. Yeah, good job. And you're going to, I think it'll be a real education. I think people are stunned when they go through it. It's such hard work to go through performance analysis. It's truly a boot camp. And you'll go through it and you're going to learn more about yourself than you ever thought you could. And then you can sit down with a real coach and work out a plan on fixing you. A book won't do that. A video won't do that. It's a real meat grind. But when you'll come out the other side, a better trader. I absolutely feel that, know that in my bones. Yeah. Okay. All right, so we have a lot of requests for CAD yen. So let's pull up Kitty CAD. What strategy am I using? I'm a swing trader focused on trend. So I define myself as a trend trader that looks at monthly, weekly, and daily swings. Okay. The tools that I use, right? So I got a lot of stuff on here, and some people get really overwhelmed by that, and I forget. So let's show you what I need to trade, okay? This is the information I need to trade. And even that's not necessary. Let's simplify this even further. There we go. That's the information I need to trade. Okay. That's all I need. I don't need oscillators. I don't need moving averages. I don't need candlesticks. This is what I need to trade. So I'm a trend trader. I prefer, if I analyze the trend as being down, I prefer to sell. And I prefer to sell at resistance. Okay. I use two things in my trading. Both are leading indicators. One, and we talked about this earlier, so let's go full circle. I separate market from price. Remember that? I showed you how I use moving averages to separate market from price. I use oscillators like MACD and stochastics to separate market from price. I also use two leading indicators to separate market from price. Okay? One is price action, support, and resistance. And I'm literally connecting bottoms and tops. Okay? I look at these peaks and stuff, and I say, well, in the future, this might be important. 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 So they're all leading indicators. Okay? So we'll call that price. It's actually price action, so PA. The second thing I use are pivot points. Now, pivot points, so price action is price. So that's the P in the MP. The M in the MP is market, right? Pivot points measure the market or separate market forces from price action because what they do, so what you're looking at here, the big ones to the left, these colorful ones, they're weekly pivot points. And so what they're doing to get this calculation what it does is it looks at the market, the previous period, the previous week. And it says, what is the high of the market? What is the low of the market? And then it creates a weighted average. So it doesn't look at high, low, divide by 2, because that would give you average, mean, right? What we wanted is weighted average, because what it does is it looks at sentiment. So what it did is it looked at the high, looked at the low, and looked at the close. And you see how the market started much more bullish. And at the end of the week, not only was it bearish, it ended the week bearish. Because you can have a situation where it started bullish and midway it was bearish and then ended sort of on a rally. What this is saying is at the end of the week, the market was still very, very, very bearish. So what it did was it moved the central pivot from way up here to way down here. Okay. And so it's a weighted average. It incorporates market sentiment. So this is market support and resistance. And the price action is price support and resistance. And right? And that's what I'm trying to do. Support and resistance using leading indicators to separate market from price. But I can also add moving averages to do that. I can also add oscillators to do that. But those are not absolutely totally necessary. If you take away my leading indicators, because right, oscillators are lagging, moving averages are lagging, pivot points are leading, price action is leading. You take them away, I can't trade. Enough said. Okay, so this is all I really need. The other stuff is helpful. So like, right, on this day, as a bull, this was the target. Did we hit that? No. We got pretty close here. Okay, but that's what the analysis is telling me, that it could or should go that high. How about this? On this day, that was a sell, and it told me this was the target. Okay. Pretty cool, right? Thank you. That's funny, Forex paper, that made me laugh. I haven't thought about that in a long time. Yeah, profiteer. Man, those are old days. You don't know my mind. No, Mubarak. No, if you don't have enough money to pay for training, I would just suggest you save your money. Go to the free webinars that I do every single day. Open a demo account at Traders Way, and maybe take a second job, save your money. Yeah. All right. So, USD CAD. Let's take a look at it from this point of view. Let's go out here. And let's try to ask the market what it's doing. Okay. That goes all the way back to here. Okay. And then what is the more current trend? Let's say 3 weeks, 4 weeks. So how do you feel about that? It seems like it's slightly up, but over the last month hasn't really done anything. So will it go up or will it go down? We didn't do Aussie Kiwi crypto, so we'll do that. Right? Is that something that you want to start investing in and start trading in? Is the probability high that you're going to make money? Remember that capital preservation? Imagine, right? Imagine that you are in the business of picking fruit. There must be lower hanging fruit. Why climb to the top of the tree? You can fall out and hurt yourself. Okay. Where we are currently is probably more of a bear than a bull, but you know, until we get through that, it's really hard to tell. Okay, because right now it's doing this, and it's slightly more up on the longer run. So I don't know, dude. I don't know. I just see slightly up. Nothing's happened in a month, so now you want to get involved? I don't know, you know? Well, Mike, that trade's over. Okay, that trade is over, Mike. So no, I don't want to do it. It's over. That was so last week. Okay, you're about a week late on that one. Aussie Kiwi. So that's one of those ones that I don't actually have. So I have to make an Aussie Kiwi. I might have one here somewhere. Aussie Kiwi. Okay. So all we know is Kiwi is weak, right? So we analyzed that earlier. So the question is Aussie the one you want to be buying? Well, a China trade deal would be good for Aussie. Okay. One thing I can tell you for sure is if you were conservative and disciplined, you would take profit. If you're not conservative and disciplined, you're going to ignore me. But that's a clear sign to get out and take profit. Okay. Now you might say, well, that's based on the previous month being quiet. Where's March? Okay. Right. So you'll say, well, that's based on this. In fact, I should draw it differently. You might say, well, Wayne, that was based on this information. Okay. And now we have a bigger move. So what would you do there? Well, even on a weekly pivot point basis, it's telling you to get out. If you just had to stay in one more time, the next bullish trade is this. Okay. But you are ignoring a lot of warnings. But maybe you're aggressive. That's fine. Just realize you have to write it down and say, I am ignoring lots of warning signs. Yeah, I'm that bullish. Okay? But make sure that that's what you're saying. If you're not saying that, then you just don't know what you're doing. Mike, no. So, Mike, the current, when I trade peso, it's a remittance trade. That only happens at a certain time of the month, and that already happened. Okay? So I don't care what the peso dollar is doing right now. The way I trade it is over. Okay? That trade plan is done last week. So there's nothing new for me to do. If you go to YouTube, type in Wayne McDonell, how to trade the Mexican peso and why it works. you will find a 20-minute video, I think 25-minute video, breaking it down exactly how to trade it based on a remittance trade. Okay, it's a flow trade. You might say to me, Wayne, I don't know what a flow trade is. I'll say, well, that's why I made a video. So it's on YouTube, totally free, totally acceptable, accessible. So Wayne McDonell, how to trade the Mexican peso and why it works. Okay. Euro Kiwi, okay. I don't know if how will I do that one? Dark necessity. By the way, thank you for asking questions today. Lots and lots of good questions. Everyone seems positive. Really good team, guys. Thank you very much. Okay. This is a buy. Okay. This is the target. Now, based on this entry, you're actually focused on R2, even though we just slammed into M4 and stopped. The actual target for this week was this. Okay, but see this cluster? That's a big cautionary tale. So most likely you're done here, but there could be like a big rally in the last 4 hours or something. But I don't know. It doesn't have to be. If you are a bear now, you don't really have a counter trend trade here, but you do know that bulls may exit right around where we are now. And that is your trade for next week. So you might front run, jam a stop, and see if you get one of these moves next week. You don't really know. It's kind of a shot in the dark. Nothing to be in love with. But you do know bulls are supposed to exit here. So that's if they exit, right? If they exit their long trades, they have to offset. And that means their brokers are actually putting in short positions. And so you may get a volatility kind of move. So it's not necessarily bearish, but you know bulls are exiting. Okay. On a monthly basis, it doesn't really say reversal. So yeah, it'd be a short-term trade. Now, if you're a bull, let me go back to that. Let me pop this into an hourly chart. Okay, if you're a bull, you're supposed to exit here. Great, great. So you're going to buy it here on Monday. Okay. Easy peasy lemon squeezy. It's a roll reversal scenario. You're just buying that. Okay. So you take your profit, put the money in the bank, let it drop. You're not giving back any pips, and then you're going to buy it back. Isn't that nice? Isn't that hot? It's sexy, right? Do you have any more content that is not free? Yeah, fxbootcamp.com. It's like a 18-year-old Forex website. It's been around like 18 years. Try that, fxbootcamp.com. Cool. That would be it. I only got 6 minutes left, yo! Any more questions? How can I help? Talk to Uncle Wayne. Come on, guys. Come on, let's get serious, huh? Last 8 minutes. It's like 6.5, 7 minutes. Last 7 minutes. Let's get serious now. What do you want to cover? Hey, check this out. I don't trade futures anymore. I used to. Right around my Series 3, when I was done getting my Series 3, I started trading a lot of gold futures, stock indices futures, oil. I was a big oil trader. And then I put in my taxes, and my tax return was something like 700 pages. I am not joking. Phone book, tax return. I'm like, holy crap! Like, I don't know, it was like a $12,000 accounting fee just to write my taxes. Like, what the heck's going on here? He's like, well, you trade the foreign exchange market, and that has certain tax treatment for profits and for loss. And then you traded stock indices, and that has different tax treatments for profits for loss. And then you traded commodity futures, and that has certain tax treatments for profits and losses. I'm like, whoa, 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 whoa. And he's going through it. I'm like, they're all taxed differently and with different filings and different this and different that. And he's like, yep. It was a big learning experience because if I predict oil moving, I know how to trade oil. Of course, now we can do it not through the futures market, but we can do it through our Forex account, right? So, but back then, I could trade it off CAD. I could trade gold off of Aussie. I can correlate almost any of these commodity moves, right? Like Euro, Yen, and the S&P 500 used to be like tick per pip. And so I just correlated everything and traded everything off Forex. Plus, Forex gives you a better leverage, lower costs. It pays you interest and all that kind of stuff. And so I went from like loving Forex, but loving everything else too, to just trading everything purely Forex. Okay. Okay. The dollar move, so someone asked me about dollar strength long-term in April. It's more of a repatriation issue out of the yen. And then dollars also being affected by the more we learn about the Fed, and it's also being affected by trade negotiations with China, which I talked about with Traders Way clients 10 days ago to be prepared for the negotiations this week. And any positive sign out of that's probably to rally the stock market and stuff. So, all of that is a consequence of that. But there is a bit of seasonalities to some yen strength. We were prepared for that in March, though, too. That big yen strength move in March, we were prepared for weeks in advance for that. So Mike says, will the U.S. dollar gain or lose strength over the next year? That has to do with macroeconomics. Okay? If macroeconomics stay positive, and right now we have like a good U.S. and everybody else sucks. So that's the thing that's holding the dollar back. But as long as you believe Americans feel rich enough to buy foreign goods like Hondas and BMWs, then the dollar will remain weak. Okay? And I'll give you an example. I bought my wife a car the other day. I went to the Mercedes dealership. It was packed. And I went to the BMW dealership, and it was even more packed. So I test drove some cars, took a look at some things, all that kind of stuff. I went back a week later to buy, and almost all the inventory had turned over. I'm like, where are all those cars I looked at a week ago? Like, this was at the BMW dealership. I was at the front, and they had all these different cars, and I tried this one, tried that one, 7 Series, 5 Series, 3 Series, X5s, X3s, X1s, X2s, trying all these different things. And they had sold everything I'd looked at except, I think, one. I'm like, where are the 7s? And they're gone. I mean, they were gone like in a week. And then you go inside, every desk is filled with people buying BMWs. And I'm over at Mercedes and I'm standing in line waiting to be set because everyone's busy selling cars. So I look at that and I'm an economist, right? I'm like, dollar weakness. Okay. I was telling a story the other day too about I took my wife and kids to buy shoes, right? My kids need shoes for school, right? We go into the place and we find our shoes. The place is packed. Customer service sucks. Welcome to America. There's like 3 chicks standing around talking to each other while 40 people shop for shoes. Ran into a neighbor and everything. Like, this place is packed. We're just buying Nikes and Vans, right? Anyways, so we go through, we find our shoes and all that. Stand in line for like 20 minutes. I'm thinking, dollar weakness. Meanwhile, inverted yield curve, right? Oh, it's the end of the world. It's the end of the world. Not where I live. I was telling you a story maybe 4 months ago now. Lots of time have gone by. Shopping for furniture. And I found 2 Calvin Klein, I think it was it Calvin Klein? No, Tommy Hilfiger. Found 2 Tommy Hilfiger living room chairs. Really stylish. It had the same Tommy Hilfiger fabric, but different design of chairs. And I love that how they were clearly the same chair, but different chair. Like one had a different back and like different chairs, but same fabric, all Tommy Hilfiger and stuff. So I'm like, oh man, I want to buy these things, right? I need to show my wife. And I'm walking over and I'm in the lamp area and they have these beautiful Tommy Hilfiger lamps, glass, very Art Deco kind of stuff. And I'm like, my kind of style with the glass and the stainless steel and a nice thing. I'm looking at this and they got a tall one and they got a little one. I'm like, oh, this will be a good reading lamp. This could go over there. And then I tell my wife, I'm like, hey, look at these lamps. And by the way, I found some Tommy Hilfiger chairs. Let me go show you. And I go back. Someone bought them. Son of a... Right? They're gone. Someone like there's a for sale. Someone had bought them in the 8 minutes I was gone. So I talked to the manager and I'm like, hey, are you going to get more of these? He's like, no, you're not going to see these chairs again. I'm like, dude, are they moving this fast? He's like, yeah. He's like, if you find anything in our store that you want to buy, you need to buy it. I'm like, you're joking. That's the U.S. economy where you need to walk in and you're like, I need to buy this. It's available right now. I'm taking it. It's mine. Like you can't turn your back for 8 minutes before someone buys Tommy Hilfiger chairs. I'm like, oh my God, right? I can't get customer service at the Mercedes dealership because they're all selling cars. Unbelievable. Unbelievable. Right? And then so I ended up buying a BMW. And I'm like, he's like, are you going to finance this? I'm like, no, I'll just buy it. I said, do you take credit cards? And he's like, yeah. And then he's like, well, we'll give you 1.9%. What? Yeah, we'll give you 1.9%. I'm thinking, I can beat 1.9% in the market over a year. I have to make 2%. So I'm like, yeah, okay, I'll take that. And he's like, good. Went over there, boom, came back. Yeah, it's your car. 1.9%. No wonder they're selling cars. So like, is inflation so high and is the interest rate so high I can't even afford to buy a car? They're selling cars as fast as they can put them on the lot and I can get cheap financing. I didn't even want it. They're like 1.9. I'm like, what? I'll take it, right? So all of this stuff is an economist's point of view of the real world. So I don't know what they talk about on CNBC and Bloomberg. I don't know what they write about in Wall Street Journal, Investor Business Daily, Financial Times. I don't know. I don't even care anymore. But I walk through my world and I'm translating this into trades. So is the economy about to crash? And are we about to fall into recession because of an inverted yield curve? Well, my analysis, both technically and fundamentally, indicate like, okay, we're maturing the cycle. But I think we're like 2.5 years away from that. Okay? Yeah, retail's changing. There's no doubt about that. But put it this way, if retail's dying, then why is Amazon building stores and building mobile trucks to bring stuff to you? Why am I was at a store, probably 2 different stores the other day. I noticed they had Amazon lockers in the stores. Well, then why are they doing that if retail's going away? No, I think retail's changing, but I'm still waiting for a paperless office. You know what I mean? That was promised to me in 1989, right? So anyways. So I've taken too much of your time. Thank you for hanging with me. Just currency trader with currency traders. I appreciate that. I enjoy the camaraderie of our community and the positive aspect of us working together. So thank you very much for being a part of my life. Thank you to FX Street, right? This is the 13th year now. We're in year 13 of this one webinar. So I've been working with FX Street for about 15 years. And I appreciate them. So thank you very much to FX Street. Right? That's really cool. They've blessed me with like Speaker of the Year, Webinar of the Year, Educator of the Year, Blog of the Year, a lot. So we go back a long time. And I know, having met with even the founders, their intent is to make a difference in your life. And I remember having the conversations with them. When I do this non-farm payrolls thing, it needs to be different. It needs to be meaningful. It needs to have a positive impact. And I think 13 years later, we've definitely done that. So if you'd like to hang with me every single day for free, please visit tradersway.com, open up a trading account. Even a demo is fine. And I do webinars every single day, 7:30 in the morning, Monday through Friday. If you want education, that's fxbootcamp.com. We have a live aspect to that, as well as videos. I do a swing trading group, meets typically Fridays. Because of NFP, we're going to meet on Sunday, and we're going to set up trades for all of next week. 2 to 250 pip moves. We'll look at all the yen pairs and all of the dollar pairs and set them all up. That's what we do. So I'm trying to make myself available to you. I'm trying to make a positive impact on your trading career and your life. So working with FX Street, working with Traders Way, doing FX Bootcamp, they're all there to help you. Most of it's free, some of it's paid. That's how it is, right? But I'm available if you need me, like those videos, I wrote a book 11 years ago. It still helps. It's still good. I mean, I've documented as much as I can. How do you trade non-farm payrolls? I documented it all at FX Street years ago. How to analyze this and how to come up with headline numbers and how to trades and counter trend trades and scalps. And it's all there. It's all been documented because, I'm sharing my trading secrets, if you will. It's all been documented and shared, in this case, hundreds of times. This was non-farm payrolls 156 months in a row. So I'm doing my best, my absolute best, to help you any way I can. So I hope you take advantage of that. Or at the very least, I hope you enjoy our time together. I know I enjoy my time with you. So see you next month. See you Monday. Peace on earth. May the pips be with you. May your profits be above average. See you guys. If I can find the button. I had to there we go. I had to expand everything. All right. Have a nice weekend.